Welcome to Markets Now. I'm Michelle Ruck along with Nick Cholis with Farmers Keeper, and we're seeing some mixed market trade here as we move through the mid-session today. Looks like cattle are lower on the live cattle futures, feeders a bit higher as well as hogs, and mixed trade over in the grains. Feed grain sector is lower, but soybeans after a lower start have come back just a bit. Nick Cholis is joining us, as I mentioned, and feels like we've had a little bit of a risk-off session here that has impacted the grains. The one exception, soybeans, where we actually had some export business this morning. Is that helping us out there?
Hi, Michelle. Good to be with you. Yeah, it's nice to see a little bit of strength in exports after a pretty bearish result from corn. But in general, I mean, it does look like we're seeing a little bit of a sell-off here and a lot from the producer side of really just holding and watching and waiting whatever they're going to have in the bins for later on in the year.
Yeah. So let's talk about the export business. A weekly report out yesterday, corn exports down like 52% from last year at this time. And do you think that is something that's going to change anytime soon with what we're seeing with the river issues? You've seen them firsthand.
Yep. I mean, let's just talk globally first before we look at domestically. You know, a little bit more about this risk-off session today, and a little bit of the sales is due to weather pattern in Argentina. So, you know, as we look at our river market and producers deciding to hold back, we've got to make sure that we understand that there's other places that are big powerhouses that are going to produce a lot of grain over the next year, and that's a factor too. So we can't have that backyarditis of just looking at lack of corn in those areas. But certainly on the river markets domestically, I was down south in Mississippi all last week, saw a number of different terminals down there, and you can just see the pictures that we posted on things and how low those levels are. It's pretty abysmal.
That's right. So what are we seeing for cash basis levels right now? It looks like we're on fire in the west and south, and maybe those basis levels ease a little bit as we get over to the east.
Yeah, definitely, and you can tell when you're looking at places like northern Texas and the Panhandle, or western Kansas, western Nebraska, where there's a massive grain deficit and there's a big demand for grain and DDGs to all the different livestock feeders out there. They're actually pulling grain from closer in to the east and taking that away from where the river market traditionally was. That's also being reflected in truck rates. Carriers Keeper, our logistics team, is not only seeing constrained capacity that's normal during harvest time, but when we look at relative cross-country runs on DDGs or anything coming off the river, it's even more constrained because there's just so much more of a demand for longer hauls to get that capacity to the feed mills and out of the ethanol plants that are full up with DDGs right now.
Right. And we have had some rain that has fallen in the Mississippi River Basin, but it doesn't look like things are going to change anytime soon, right?
Yeah, I mean, I think it was in certain areas something like 1.5 to 2 inches in some areas, but that's not going to help with anything. And certainly, you know, when you compound that with just relatively weak sales in general because of that, and a still a relatively strong dollar, there's going to be a lot more options out there.
What are farmers doing right now? Are these cash basis levels, these strong cash prices, enticing farmers to sell, or are they locking things up here after harvest?
It really seems like after the rain that came through some of the upper Midwest as well over the past few days, that a lot of guys have gotten a really good chunk out, especially considering how late we planted this year. And anything that's unsold or doesn't have basis set on it, a lot of guys are looking to roll that and just put it in the bins. I mean, I'm surprised, as are a lot of people, with prices where they're at right now, that we still have a positive carry going into March for corn. That's all more bullish factors for a lot of producers that say, you know what, every time a merchandiser like yourself keeps calling me, the bid just goes higher and higher and higher. And so that actually creates the opposite effect that we think it normally would, which is producers don't want to sell because they just keep seeing those cash basis levels go up. But be careful, any farmers out there, because all those changes going on in the East, there's a lot of factors where we're hearing from ethanol plants that they're full up with DDGs right now. And the fact that they don't have that competition coming in from the river terminals, and oil prices staying relatively lower as we're sitting here, you know what? They're not going to have a big incentive to continue boosting that basis bid to buy up corn or ship it down to Texas.
All right. So you're suggesting that producers may want to do some pricing here then?
I think it's going to depend on everybody's individual financial position and what their opinion on the market is. But at the end of the day, I think it's kind of crazy. We're looking at 680 want. That's
Yeah.
$9 corn.
Right, exactly. What does this mean for livestock producers right now, Nick?
Well, they've got to really balance those positions because their cost of inputs is going through the roof. On the global scale, we still have China still relatively shut down with COVID. And we saw with the National Congress last week that there's not a lot of changes going on there with the zero COVID policy. And so that's going to affect meat demand globally. But the American consumers remained pretty resilient and able to stomach these prices. So we'll see what happens with inflation going forward and more rate hikes or anything. But a lot of the actual cattle feeders that we work with, hauling in DDGs and buying grain for them and arranging the logistics for it, they're kind of getting to a point where it's like, you know what? We're already offering $8.50 for corn. We're going to wait. I've heard more times than I can count in the past week. Some of the older guys we deal with that have been around for a long time saying, you know what, short crop, long tail. We'll get the grain one way or another. But I just don't want to see producers lose out on a good thing.
All right. Well, appreciate that and some good words of advice and recommendations. Thanks so much, Nick Cholis, joining us with Farmers Keeper.
Thanks, Michelle.